Before I get into that, all of you have to know what this finance is about. What kind of finance we learn and we deal. What are its classification? What is so special about managing the money? What are the topics is there for you as a financial management which covers you 60 marks in the examination? Is there any linkage between the intermediate syllabus to the final syllabus? Post your finance, post learning about your chartered accountancy course, what areas you need to look into? These are all my major discussions and I'll be able to give some lights on it. Hope that all of you have a long notebook with you. Please respond to me, have a long notebook, pen, pencil, calculator, eraser, and everything you are ready, full fit. Excellent. When I say the topic CA to CFO, just connect to this. When I say topic CA to CFO, Chief Finance Officer, it's important for you to know and understand the finance, the world of finance. And it's important what is that finance is about. Can anyone tell here what is that word finance is about? When I say finance, what is that finance we know? It's basically money, right? Money's worth. It is basically, if I say 120 lakhs I need now, that's the money or finance you need now. It is money related, managing the monetary resources. So when I say this particular aspect, money or money's worth, please do note, we have to understand, apply all related to managing the finance. Finance, note down the first definition, the word finance means provision of money required at any point of time. Repeat, provision of money required at any point of time. At a given point of time, what provision of money required is called as finance. You can classify finance three category. All of you make it three category. You learned in your earlier college days, any organization of three types, basically, broadly. One man show, it is sole trading. More than one person, two or more persons, it is partnership. Finally, corporates or companies. Same way, the finance dealing can be an individual or sole trading finance. It can be a partnership finance. It can be a corporate finance. So all of you classified that. So there are three kinds of finance. I just write here. So when I say finance, we can write in three parts. So sole trading finance, partnership finance, corporate finance. So I think you have written the first meaning of the word finance, provision of money required. Now in our daily life, as all of you know, in our daily life, we have to understand very clearly how to manage our financial resources. Do you agree with this? Even if you are a student, probably in the student life it could be really less. Even if it is a student life, or it's your articleship period where you get stipend, or it's your during your the initial days of your personal life and a professional life. Even in companies, you are managing your money, you're managing the taxes, you are managing various aspects in and out about finance. You need to know how you will receive and how you will pay. Is there any benefit if I delay? Is there any benefit if I pay in advance? All this you need to note. That's what the major crux of this. I straight away go to this particular one. Just I want to ask you this particular, all of you are able to make out? Can anyone tell me in this session who is a part of our discussion? When I say a chartered accountant, generally what could be his major strengths? Let us see your responses. What should be his major strength? What is that core area you all have to know? Law, I don't think so. There are lawyers better than that we do. I agree. So obviously one is about accounts. Do you all agree with me? One is about accounts. because that should be, because in your name only there is an account. Chartered accountant, yesterday I was mentioning. Of course, the next best area that you all have to look at is about, all right, first as accounts. Next best area is about your bread and butter comes through people known as you as the tax consultant, right? So taxation, direct and indirect tax put together. If anyone asks me why it is so, the tax laws are not so simple to understand. Thanks to all the governments and various parties who formed finance ministry, where it's not that simple to understand. That's why you have a lot of scope there, where people will come to you. They will seek the idea, guidance. When I say tax, it is not just about paying taxes. There are so many things inside it. I'll just tell you three important words. Quick, three important words. All of you are there. Three important words regarding tax. Okay. One is tax planning. One is tax planning. Hope you are writing. Tax planning. The other one is tax avoidance. The third one is tax evasion. So you need to understand the very clear difference between these three words. What is tax planning? What is tax evasion? What is about tax avoidance? Managing the entire tax, gamut of entire tax world, where you need to have a lot of subject knowledge. You need to understand the provision. You need to interpret that provision to the best without killing the spirit of the words which is used there. That's tax. So that's your bread and butter, of course. Third area, after becoming chartered accountant, you are named as what? Any other name for you? Assume 4 or 5 years down the line, 3 or 4 years down the line. Yeah, you are named as auditor. Therefore, the another area that all of you are looking is as an auditor. I think these are all the three core areas that we all know. I have come here to tell you this particular table has one more leg. This particular cot has one more leg. Probably we have not understood, we have not realized. And that is the area which I want to highlight. The fourth leg that you all have to explore. Someone said cost. No, it's not cost, because there is a cost accountant who is very expert in that. Of course, you need to understand cost, which is tomorrow's discussion. But the area that you all have to understand, people by default assumed, society assumed, anything related to money managing, brainy fellow is you. Don't know right or wrong, but people assumed that way. So jokes apart, coming back, finance is what I expect you to learn, not just as a marks of 100, not just for 100 marks. That is there, however, you have to learn in inter, you have to learn in final. Here it comes, so 60 mark, then you have another paper for CA final. But beyond that, you have to learn. Students, if you don't do well, or you know it but you are not gone really into it, or you have not taken a lot of interest to learn it, probably after your completion of chartered accountancy course, when you go outside in the corporate, the finance jobs are plenty. If you don't perform, another fellow will MBA who speaks very nicely, he has that communication skill to make it more lucrative and convince the people. Then probably if you are not interested, you are not taken this seriously, such good opportunities will go to someone else. And you learn very hard to learn the finance. It's not that simple. Therefore, you need to know the subject, and not just about subject, as a part and parcel of whether it is a corporate life or it is about personal life. You need to manage your finance well. Do you all agree with me? Do you all agree with me? Yes, no, one single letter yes. Probably that is the area that I am excited to discuss with you. What could be your journey or path starting today? Just you have written the foundation examination, where where I am excited to see you. At least few people in this, or 40, 50, 60% people in this, as the finance professionals working in the top company as the finance manager, chief finance officer, assistant manager in the finance, etc., etc. So that's where you have a lot of scope. And trust me, many years I believe people have not explored well. That's why this cake has gone to someone else. It's the right time to understand. One key thing, write down one key thing to crack your such interview or to get into such profiles. At every stage, you need to know what is happening outside. That's why you would read the newspapers like Economic Times, you would read the magazines related to finance, and that will, many students have seen after their chartered accountancy or in the final year, they go through this. No, no, it's not going to work that way. It's never going to work that way. It's an ongoing process, my dear. It has to happen from now. After 3 or 4 years of learning, understanding the corporate, understanding the finance world, that day you'll be able to make it better. Do you all agree with me? Do you all agree with me? So, will you promise me at least in a week? Let's start in a week. At least in a week, you go through such newspapers and magazines once in a week. Then slowly it should be 2 or 3 days. Then daily you have to refer it. It's important. It's important. It is immaterial where you are from. It is material what you read, what the knowledge you possess. Many of us have a lot of what I can call the confidence is low among many of us. No, it is not. Today the technology, today the media, it reaches to you every corner of the world. What else you need? Whether it is you are in Delhi or in the Halli or in the village, it's same. And I think you have a lot of opportunities. Hope that you take best use of it, and you have to be confident when you do that. For that, on that day to become, you have to start reading all such newspapers, magazines which related to economics, which related to finance, related to companies, which related to acquisitions and mergers, banking, then the interest rates, etc. This all you have to start developing from now onwards. And yeah, and with that I will slowly move on to the next one. Right, I before I go to this is what I want you all to check it out. Your journey should be, my wish is this way. You are just a student here. You were student few years back, or could be 1 year back, without entering into this course. You are just a student, 11th, 12th, or it could be BCom, just that. But next step, you have that daringness, you have that confidence that you become chartered accountant, and you have taken a step ahead, and it's the right step. And not all people have that what I can call that, such a guts to take this, and you have taken it. It's good. You have moved ahead. Student, this is where next challenge lies. Completing at least one group. Are you there? Completing at least one group, which I was mentioning to earlier, where you have to move on to your articleship. There you learn much better. You also learn as a student here. As one subject you learn as financial management, of course you learn there, along with all other subjects. And in the articleship, you learn how to manage finance. You learn the worthiness of rupee. You learn how your boss manages various financial affairs, how he will be able to tackle it, what guidance he will give, what price differentiation he will make, and why he makes it. All that learning will happen to you in your 3 years of wonderful training, and there you will be articled assistant. You are not just a CA student, you have gone ahead. Students, writing, completing final exam, you become chartered accountant. Have you seen this? Have you seen anyone this? CA, have you heard this? Anyone heard this? Have you heard this? Anyone heard this? Very interesting. One of the ICA's quotation, CA, the alphabets of trust. And assume a company making 25 to 30,000 crores of turnover. It's a huge amount, right? It's a huge turnover. It's huge top line. Top line means sales. Take the words. Whenever I use the word, this all words. Top line means sales. Can anyone tell what is bottom line? Let us see how much you know. Top line is sales. Then what is bottom line? Many of you got confused. Where is the line, no? Okay. You know top and bottom. Now this is different. Okay, excellent. Purchase, sales, return, etc. The top line means your first item in your P&L account in the horizontal format. Sorry, in the vertical format. And the T shape, we always know it. So first one is top line is your revenue or turnover. Bottom line, whenever I say it, it is always your profit, reducing all your cost. Imagine you have close together turnover, close together margins, and close together reserves and surplus and your shareholders' money. And who is how they trust the people, whether they trust directors, whether they trust, all the trust factor is required, but society and the shareholders will trust on you. They believe that you being the chartered accountant has such a confidence, they believe that this fellow will manage very well, this fellow is finance professional. That's why it's important to keep that trust. That's what I want to tell you. CA, the alphabets of trust. That's why the finance will not go for anyone's hand. It will go for your hands. Now you don't get in cash. Obviously, you deal in checks and transactions, online transfers, etc. But that even small mistake will cost you a lot. And people, the company, or directors, shareholders trust that you do well. Therefore, you have bigger role to play as chartered accountant, as finance professional, as finance professional. Here you get training. Student, later wish that you have to become, could be smaller roles in the finance, could be looking after receivables, could be looking after payables, could be looking after cash management, receivables, debtors management, like that you at every stage. Could be assistant finance manager. But the top post that you have to reach is chief finance officer. That's the biggest role, and he has almost the equal and all, the highest control. Next step is CEO of the company. Almost CFO, COO comes in the same, but people respect CFO high because he's the single, or he's the major decision maker when it comes to finance. Of course, with the discussion with the CEO, there are high chances that from CFO you move on to the CEO, chief executive officer, and you manage the entire affairs of the company. Are you excited to go for every stage? Some response from you. Just don't tell yes, yes, is it. Think and tell. Is it sure? Thank you, super. Surely, super, excellent. I think my wish also, don't be just at one level. Go to the step by step, step by step. Executive officer, and yes, journey is interesting, Prithvi Hebbar, right? Student, I was mentioning to you, and I will take some of the works. You may raise this question. If I am an accountant, I do the debit, credit, journal, ledger, trial balance, P&L, balance sheet. Auditor means check and verify. Tax means how much income tax in that. What finance people has to do? Correct, no? This question you will have it. Again, I was just mentioning to you. Here to here, how many of you want to go? All of you raise your hands. Everyone want to go? Want to make your journey till here to here? I could have written many steps, but yeah. Super. One exercise that you all have to do, we all have to do is at the end. Okay. All of you have this note. All of you are able to make out. You have. I have 500 rupees note. You have any that denomination not important. Yeah. All of you have it. Super. Any note is okay. You take one note. You should have one coin. Okay. You should have one coin. Both you should have a note and you have a coin. And we'll discuss at the end what's special in this. Don't forget. This is all about journey, possible, whether you will be able to go, whether you will be able to go from as a student, can you become CEO and CFO, right? Don't forget, last discussion is that how can this will be of great helpful to you. I'll give an ice breaking exercise and activity to you, and that's important, and I will take at the end. All of you are excited? At the end we'll discuss that, right? Students, I'll take to the next part. So, finance, I told you, I classified finance also. We were writing, finance, provision of money required at any point of time. What finance officer has to do? Correct, no? What are his roles? Do you all agree with me? What are his roles? What that fellow has to do? I'll write here. Classification I made: sole trading finance, partnership finance, we learned corporate finance, corporate, cooperative society, etc. Partnership, LLP, etc. One side, like that. Just summarize. I don't want to give you complicated stuff today, and it is not, in fact, if you understand really well. So, a finance manager has to jiggle between two roles. Okay, right here. All of you are clear? You have two major role in the business. All revolves around this. So, what is that? What you should do if you are a finance manager? Can anyone tell? Can any rough guess if you are finance officer what you should do? I will tell. Let us assume managing your finance, that's what I am discussing in financial management. Excellent. Sri Samarth has some idea. Income and expenditure. I will give an idea. For time being, you all assume that you have some big plan as an entrepreneur. I'll put it this way: I have some big plan as an entrepreneur, and you are my chief finance officer, and I'm in the very initial stage. Listen carefully. I have one big plan. Okay, what is the plan? Want to do one big hotel and hospital. All this revenue, all this will involve huge money. And I have calculated building how much, area how much, equipment how much, all this put together 50 crores. How much? How much? All of you answer. 50 crores. And I don't want to go by sole trading or partnership. Very difficult. No, I don't have money of 50 crores. Neither by partnership. I want to go by company. Okay. Corporate. Very good. Go by company. Very good. Thank you for your suggestion. You are recently appointed as CFO. Listen, you are recently appointed as CFO or finance manager. First question, when I explain all this idea, sir, this is what land requirement, this is what building requirement, this is what equipment, this is what furniture, this is what machinery, this is what architect design plan, all you listen. But you are concerned about money, right? You are a finance officer. What could be your first question? What could be your first question? What could be your first question? Let us see. You have to ask me some question, right? I am just explaining. Definitely, Reddy Shrikant says 50 crores, okay. How we will raise the funds? Sri Samarth correctly asked, and others also asked. How do you raise the funds? So the first bigger thing that every time finance manager, if I am your finance manager, every time we all have to, if you are a finance manager, you have to understand how do you get funds? How do you get money? So one is about raising funds. One is what? Raising funds. Do you agree with me? Okay. In company, do you have option? Yes, you have plenty of option. That's why you're going for company. You can go for equity shares. You can go for preference shares. You can go for debentures. You can go for bank loan. You can go for public deposits. You can go for bonds, etc., etc. If you are an individual, you have to contribute. Max to max, you have to take loan from your father-in-law. Correct, no? That's all, no? All right. Provided your father-in-law is rich enough. Okay. So this is about first part, raising funds. The other part, okay, with all the calculations, somewhere you make, I don't want to go to this, we'll discuss little later. Money is raised. It has come to your bank account. What could be the immediate question that you all have to ask? If I am the finance, if you are the finance manager, what is your worry immediately? Money is ready. What to do with that money? Correct. It is allocating, or I can use the better word, utilization of funds. So I think this is the crux of any finance manager's work. I'm not telling you are not going to do other works, but this is the main thing. Get funds and use funds. How many of you agree with me? How many of you agree with me? Get funds and use funds. This is the main thing that you have to do it. Right? Shall I move on to the next one? If you understood, please respond to me. Have you understood this clearly? Okay. Now, I ask you next question. Jivan, can I get a glass of water? Students, next question or query will come like this. Have you heard that word called decision? Okay. What is decision? Can anyone answer? What is decision? What is decision? Some response from me? Decision is decision, like planning what to do. Very good. Okay. Let me take an choosing from alternatives. Excellent. You have some alternatives, you have to choose one of them, two of them, etc. You have to make choices. Excellent. Super answer. Now I am going to discuss, if you are finance manager, what could be your decision making areas? What could be your decision making areas? Just what I said. Same decision means you have alternatives, you have to choose. Similarly, you can make out here, this is also a kind of decision, no? This is also a kind of decision. You have so many alternatives, which one you have to go, which combination, how much your debenture, how much your equity shares, how much your loan. You need not to go always equity share, there are advantages that you have to know. Therefore, your first area of decision making I can call financial decisions. What decisions? Financial decisions. In that first decision that you all have to do is financing decision. Can you repeat with me? Interesting. Financing decision. This is all about shares, debenture, that combination, that percentage you have to decide. You said no 50 crores. From each how much you want to go. That is financing decision. Any confusions in this? Simple. Is again sources of funds. Then what did you say? Money got, then what is your next one? What is your next step? You have to use it. Excellent. That decision we call it as, you have to see, let us look from accounting point of view. So interesting. Financing decision, whether it creates liability or it creates assets. First, share, debenture, bank loan, all it creates liability to you. Borrowed, no, you have to give back. So liability side you created. Now important to create what? Liability is equal to assets. You have to create asset side. Whatever money you got, that 50 crores, you have to plan your balance sheet asset side. Where to invest? Where to utilize that funds? Of course, something could be your working capital. Small affairs, managing, salaries. But majorly it should go for what? Majorly it should go for what? Your, as I said, no, land. You go for building. You go for plant. You go like this, you have to do. This decision we call investment decision. This decision is called as what decision? Investment decision. Have you written? Have you written this? Investment decision. Financing decision and investment decision. I'll go still deeper into it. Students, when you say investment in the asset side, assets are broadly two classification. Tell me, what are the two classification? Assets are two classified. Two class. One is long-term assets or fixed assets, non-current and current. Therefore, this can be two types. Non-current, I call fixed assets. Other one is current assets. What is the feature of fixed asset? Any guess? Why you have to invest in fixed asset? Interesting question. Why you have to invest in fixed asset? First, long-term benefits. Correct. Listen, if you don't have fixed asset, you cannot do production and sales. Fixed assets straight away impact on your profitability. Repeat, there are important word I am using. Straight away it is on profitability. It generates revenue, then it turns into profits. So profitability is the main feature of fixed asset. Whereas current assets are not for profitability, they are for smooth functioning. Therefore, they are there for your smooth production and sale. They are there for your working purpose. Therefore, this gives you liquidity. Can all of you write down this? You all invest all this because stock, cash. It will finally the most liquid asset is cash. I have building, I have plant, I have machinery, but to pay my salary, I should have a cash bank. No, to do my production, I should have stock there. Purchase stock should be there. Like this, this is all part of your current assets. Hope you understood. Is it clear to all of you? Interesting student note. Assume, somehow as finance manager, you got some idea about financing decision. We invested, started operating. What can happen in year by year? You do P&L account, you do P&L account, and you get finally profit. Correct, no? You get profit. Once you get profit, listen, in company, after paying taxes, etc., what you will do? Tell me. You got some profit. You got some profit. Let us see what you will do. Tell me. Super. All of you are explaining it. Super. Listen, there are only two things can happen. One is you keep you keep it as reserve, or you give it as dividend. Anything else? Basically only this, no? Very interesting. Account, if as an accountant, you have very beautiful words in your accounting, wonderful words called general reserve, reserve fund, dividend equalization fund, general fund. All this to tell you to the shareholders, boss, I will not give you now, you may get in future. That's all the point. This is retained earning. All of you repeat with me. It's called what? It's called retained earning. First, your earnings are retained. Whatever, contingency reserve, etc., etc. Dividend is what you pay. Therefore, assume that your EPS, have you heard this called EPS, earning per share? Have you heard earning per share? Let me assume every one share of 100 rupee earned 20 rupee this year. This year earning per share is 20. You want to give dividend, say let us consider, say 6 rupee. So what is the percentage? 6 by 20. Fast. Is it 30 percentage? Hello, hello, hello. 6 by 20. Is it 30 percentage? 30% you paid out. 70% you kept inside. 70% is your reserve. 70% is your retained earning. 70% is retention ratio, whereas 30% is payout. Payout means dividend payout ratio. Student, that means another decision came. 70-30, 60-40, 50-50, we don't know, no? That decision, we call it as dividend decision. What decision we call? Dividend decision. Students, we learned in financial management, there are three decisions: financing decision, investment decision, dividend decision. Do you all agree with me? Do you all agree with me? Tell me yes, no. Okay. Now, you all invest in, I just rub it. Have you taken this? Have you taken this? Pointers you have taken? Okay. Tell me, fixed asset, investment in fixed asset, it's an outflow. Is it revenue expenditure or capital expenditure? It is called capital expenditure, correct, no? Tell me, is that simple money, small amount you invest in fixed asset? Whether you invest small amount? No, huge amount. In building, plant, machinery, is a huge amount required. It is not a small amount. Student, it is important to manage your capital expenditure. Listen, It is important to manage your capital expenditure. It is important to plan your capital expenditure. It is important to budget your capital expenditure. We call this as capital budgeting. What do we call it? Capital budgeting. It is basically planning capital expenditure. It's basically planning capital expenditure. It's basically planning capital expenditure. Whereas managing your current assets, it's basically for smooth functioning, smooth production and sales, and to maintain your business, for your operations, for your working, we call working capital. It's called working capital. Have you heard this word called working capital? It's for working capital. It's called working capital management. So fixed assets and current assets. It leads to investment in, this is also called as long-term investment. First one is called long-term investment. Second one is called short-term investment. Second one creates is all about current assets and current liability, whereas the capital budgeting is all about fixed assets. So look at here, this part is long-term liability, this is long-term assets, whereas this is short-term assets and short-term liability. Because when I say working capital, you have to pay your all short-term obligation and then you have to keep it. This is called working capital. I think this is the next thing that you have to note. As a finance manager, you all have to make a decision in these areas. If you understood, I will proceed. One single letter yes will help me to go next one. Okay. Look at here. Financial decisions. Financial decisions. This will be circulated to you. You don't have to worry. First is about financing decision. Investment. This we can classify two types. Do you agree with me? One is long-term investment, other one is short-term investment. Long-term investment decision and short-term investment decision. Long-term investment decision is called as, I will not tell, you should tell me, let us see how much you remember. Long-term investment decision is termed as, named as what? Fast. Fixed asset I know. It is called, technical word is capital budgeting. Why capital? Because it deals with capital expenditure. If anyone asks you what is capital budgeting, it is budgeting or planning your capital expenditure. And interestingly, all that capital expenditure you spend today, but benefits will come for many years. What is revenue expenditure? Pay today, benefit within 1 year. That is working capital. So the other one is here all related to working capital management. Okay, or working capital decision. I think you understood. I slowly move further. Okay, it is interesting. Listen here. Very clearly, this part you have to understand. Have you heard, you learned any computer subject in your schoolings or in your PUC? Somewhere, yeah, very good. I know only 3 things in that. There is something called as input. Hello, hello. There is something called as input. All of you agree with me? There is something called as input. Device, no, there is input. Don't ask me too much. I don't know much. The middle one is called process. Last one is called as? Last one is called as, oh, what wonderful students. You are so much intelligent. Huh? How come you became so much intelligent nowadays? By birth? Huh? Okay, good. Input, process, output. Okay. Super. Students, I link this 3 step with your accounting. What is your input? What is your input in your accounting? It's basically transactions and events. Correct? year ka, 1 year ka, whatever transactions and events are your inputs, whatever happened during the year. What is your process? What do you do in the process? Yes, it is about journal, ledger, TB, cash book, subsidiary books, rectification of errors, all that whatever you learned, that is process. Everything, bank record statement, everything comes under this. Finally, year end, what you will do? Final accounts. Finally, accounts is final accounts. It is financial statements. Financial statement has two. One is, I don't know, you should tell me. Income statement, yeah. Other one is balance sheet. Income statement in accounting wise, it is trading and P&L account. Position statement is balance sheet. All of you agree with me? All of you agree with me? Sure, is this clear to you? Okay. Another work that you all have to do as a finance manager, traditional accountant work is to end here. He started with all journal ledger, ending with the financial statements. That is a traditional accountant. But you being a chartered accountant, tomorrow's CFO, Chief Finance Officer of a good company, you have to understand how they have done. This, if you give me a big statement of 10-12 pages after learning Companies Act 2013, 6-8 pages ka P&L account and 4-8 page ka cross together, no, balance sheet, and you will submit to the management. Do you think management knows so much? No, you are the technical person. Management people want to do it very, very condensed. They want to make decisions out of it. Are you there with me? Therefore, whatever you got here, you have to analyze. You have to report. This is the next step you have to do. What do you, okay, it's something like this. I just give an example. Interesting. Assume some problem you had, some health issues. You gone to a doctor after taking appointment. Listen carefully. And doctor looked at you. By looking at you, whether he will give an injection and tablet and medicines? No, no. Do you agree? He will not do that. Any good doctor will not. He will consult. He will talk to you. Tell you go and examine this blood test, sugar test, could be urine test, and BP, ECG. Something you will do. You will go and do it. And you will not understand. Whether you will understand? Sugar 450. Oh, super, highest. No, it's not. Blood sugar should not be that much high. There's a range. That interpretation you should do. Same way as you have a lot of tools for a doctor to conclude, and a beautiful nurse has injected you and taken some blood for your for your blood sugar test. You smiled it, and if you ask her, beautiful nurse, no, you asked her, madam, is it good? She will tell what? No, 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 I don't know. Go and talk to doctor. Even she knows, she will not tell. Do you agree with me? Because that should be interpreted by an expert. If you can relate same thing here. Trading and P&L account and balance sheet, by looking at it, you cannot conclude. Can you say you made on 20 crore ka turnover? Is it good company this year? 20 crore ka CR, 20 CR sales. Is it good? How do you say? Last year if it is 50, this year is 20, it has come down. Are you there with me? After making 20 CR, if your profit is negative, then there is a question mark. Why so much expenses? We do comparison. Hello, hello, hello. What do we do? What do we do? We do comparison. One thing which I learned very interesting. Comparison of two types. Can anyone tell me comparison of two types? When you get a marks, immediately you want to see what is your neighbor's mark, no? Correct, no? One is that, or other comparison is your marks with the previous one's marks. I say this, one company 2 years, two company 1 year. Two company 1 year means your mark and your friend's mark. Comparison, many times it is wrong. ಒಂದ್ಸತಿ ಸ್ಟೂಡೆಂಟ್ ಇದು ತಾಯಿ ಹೇಳ್ತಾ ಇದ್ರಂತೆ, ಒಂದು ಹುಡುಗನ ತಾಯಿ ಹೇಳ್ತಾ ಇದ್ರಂತೆ, ನೋಡಿ ಎದುರುಗಡೆ ಮನೆ ಹುಡುಗಿ ಎಷ್ಟು ಚೆನ್ನಾಗಿ ಓದ್ತಾಳೆ, ನೋಡಿ ಎದುರುಗಡೆ ಮನೆ ಹುಡುಗಿ ಎಷ್ಟು ಚೆನ್ನಾಗಿ ಓದ್ತಾಳೆ, ನೋಡಿ ಎದುರುಗಡೆ ಮನೆ ಹುಡುಗಿ ಎಷ್ಟು ಚೆನ್ನಾಗಿ ಓದ್ತಾಳೆ. ದಿಸ್ ಬಾಯ್, he used to get good mark, okay mark, not very good, but the girl used to get good mark. And after this all, comparison every time, and another test happened, this fellow got lesser than earlier. Mom scolded. I told, how many times you look at that girl? And ಅವ್ನು ಹೇಳ್ತಾನೆ, ಚೆನ್ನಾಗಿ ಹೇಳ್ತಾನಂತೆ, ಹೌದಮ್ಮ ನಾನು ಆ ಹುಡುಗಿನೇ ನೋಡ್ತಾ ಇದ್ದೆ, ಹುಡುಗಿ ಓದೋದು ನೋಡ್ಲಿಲ್ಲ. ಸೊ ದ ಪ್ರಾಬ್ಲಮ್ ಇಸ್ ದ ಕಂಪ್ಯಾರಿಸನ್ ಸಮಟೈಮ್ಸ್ ಸೋ ಬ್ಯಾಡ್. ಆರ್ ಯು ದೇರ್ ವಿತ್ ಮೀ? I don't know how many of you are in this category, but okay, come back. One company 2 years and two company 1 year. One company 2 years is comparing yours with the previous test marks. Two company 1 year, what does it mean? Your P&L and balance sheet compared with the standard company in the industry, benchmark company in the industry, good company in the industry. Okay, I think this all. In this you do various analysis. One is cash flow statement. It will come to in your accounting. You also do something called as ratio analysis. Have you heard this ratio analysis? Was it there in your CA foundation? Yes, okay. Yes, super. If it is not there, no problem. Super. All right, students, you need to analyze and interpret all this. You want to understand when your break even will come. You have to make your sales quickly, no? Otherwise, you will be into loss. Called break even analysis. You want to know something called CVP. Have you heard CVP? CVP, cost, volume, profit. What is my investment in business? What is the sales generated? What is my profitability? Sometimes it so happens investment is so huge, profit, sales is less, profit could be negligible. That should not be the case. We learn all this. I think these are all the discussions that is important for you to understand, analyze, interpret. Therefore, your next work is analysis and reporting. In that many I told, basically in your syllabus wise, you have to learn ratio analysis. Clear? Have you understood? Yes? Okay. Now I will tell you slightly what and all you are going to learn in your CA foundation, CA inter. Shall I discuss what you learn in CA inter syllabus? Basically, broadly, first thing that you learn is all about chapter number 1, all about introductory part, theory, etc. Chapter 2, raising funds, I continue this, listen here, or I can take here also. When you borrow funds, my dear students, whether assume I am company and you are all shareholders, debenture holders, etc. When you borrow funds, should I give back something to you every year, some consideration? Of course, I have to repay your money, no doubt. If you are a debenture, yeah, I have to give you dividend, I have to give you interest. This is called, on your borrowing, you have to pay something. Assume all of you listen, you made a bank loan today. Listen carefully, you made a bank loan. That is a finance, source of finance. That's your money, that's your capital. For that, you have to pay back. What you have to pay back? Interest you have to pay back. Similarly, for 50 crores which you borrowed, no, that hospital and hotel, big, for that we have to pay back to all my investors, all shareholders, debenture holder, loan who paid. For that is called as cost of capital. The other learning you all have in your syllabus is cost of capital. If you have a bank A will charges you 10% per annum, bank B which gives you at 9.5% per annum interest, you go for bank B. You have to plan, you have to understand, you have to look at their analysis. This is important in the chapter cost of capital. You have to learn a chapter capital budgeting. You have to learn working capital. Working capital is something like Mahabharata, stories inside stories. Such an interesting. If you ask me, sir, what is that story inside this story? Tell me on the current assets, what you learn. Tell me, what and all are the major 3 components of current assets? First, you learn first one. I will not tell. You learn cash and cash equivalent. That's why it is called as cash budget. All of you write down. In this you have one small topic, one chapter, subunit as cash budget. There is debtors and bills receivable. We call receivables management. Interesting, it's important. If we give more credit, listen here, listen. You have to always, your finance manager will have to balance. What? He has to balance between liquidity versus profitability. It means to say, a small example, if you give more credit period, what will happen? There's something called cost benefit I call. If you give more credit period, what will happen? There are chances more sales, no? More credit period to customer, there are more sales. More sales, what will happen? More profit. What may also happen along with that, more sales, what can happen? More credit sales may result into what? More bad debt. Hello, are you there with me? Yeah. So you have to balance all it. If you become strict, also problem. Tomorrow sales comes down. You have to manage your receivables. If there is a long outstanding from your customers, then you have to collect quickly. Debtors are blocked. You cannot operate well. Funds are blocked. You will be in a tight situation. You have to pay, but money is not coming here. It happens many times in business. You have to manage it. Whether it is an individual, whether it is sole trader, whether it is our college, whether it is your company, whether it is anywhere, that receivables and payables should be managed well. This is your next part where you are going to learn all about receivables management. Then one more is there, that is called stock. All of you agree with me? That's called stock. That is called, we call inventory management. I'm just telling you what chapter is going to come. Okay. Listen. This capital budgeting, we discussed, I think, roughly in your time value of money. All of you remember? Leasing, you invest today, what you will get, NPV, all that. You heard all this? Okay. Something you remember. Okay. I'll tell you an interesting thing. Sinking fund. Oh my God, Swati Shetty. That is different. In that sinking fund, what are the two words I told you? Oh my God, you so much remember. Huh? Excellent. Very happy about you. Excellent. Yeah? Okay. Thank you. Which re? Okay. Replacing asset, repaying liability. Oh my God, you have too much memory. I thought in 2021 you lost some memory. No, very good. Excellent. Coming back, jokes apart. Let us consider, listen carefully. You purchase a machine today. All of listen. You purchase a machine today. On what basis? Hoping that it gives some returns. Am I right? Purchase it, invest 10 lakh. It gives you sales and gives you profit year 1, year 2, year 3, year 4. But when you pay money today, hello, when you pay money, it is today. But benefits will come when? In future. Repeat. Investment today, benefit will come some other time. See, example, 10 lakh I invested, but I will get 5 lakh, 4 lakh, 3 lakh. How much I will get? How much I will get altogether? 5 plus 4 plus 3, how much? 5 plus 4 plus 3, how much? Let us see. How much brilliant you are. Fast? No, it's not 12. That's the major fundamental you have to know. Oh, it is less than 12. Very good. So, 5 plus 4 plus 3, you learnt in maths, it is equal to 12. Whereas here we learn 5 plus 4 plus 3 is 12 only when you get all 5 plus 4 plus 3 today. If you get 1 year later, second year later, third year later, then that is not equal to 12. Hope if you remember this. Do you remember this? Do you remember? I given you a wonderful example. You cannot compare your money 1 rupee with your granny's money. Nimma 1 rupee, nimma ajji 1 rupee, you cannot compare. 1960 ka 1 rupee and today 1 rupee different. You are going to learn time value of money in this chapter. TVM. TV, you know, it's TVM, time value of money. Very happy that you all remember so many things. Student, let us assume 5 lakh, 4 lakh, 3 lakh, all that you take present. All of these three you take to present. Assume that these three present for discussion sake. Let me take it is, I'll assume 10.1. Just for 10 lakh your outflow, but all that 12 is equal to only 10 lakh 10,000. That means outflow 10 lakh, inflow 10 lakh 10,000, you are in profit of 10,000. This is called NPV. You know it's called present value. It is net present value. When you deduct, it is net. Net profit means income minus expense. Inflow minus outflow is net present value, where I don't want to take today, but we will discuss some other time. But please note, any doubts you have so here? Just example I said, oh, sir, how do you get 10.1 with one rate of interest? All that we'll discuss slowly in detail later. Just one question to all of you. Will you able to recollect what was discussed earlier in CA Foundation, something called as TVM, interest, annuity? You are able to recollect. Okay, very good. Students, in this chapter, in the new syllabus, in this chapter, in the new syllabus, when they introduce a new syllabus, CA Inter, they slightly changed. I'll just give you an example. All of you tell me, how much is my investment money here? 10 lakh. How much is my expected? I am not sure, no, today I invest, but expected that in year 1, 5 lakh, year 2, 4 lakh, year 3, 3 lakh. You will get. Listen carefully. All of you listen carefully. How much I pay today? 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 10 lakh. That is sure. Okay. But how do you decide future I get 5 lakh? That is assumption, no? That is assumed that you get 5 lakh, 4 lakh, 3 lakh. Not sure. This is certain. To purchase the machine, you have to pay 10 lakh, you get the quote and you pay it. But these three are not certain. So therefore, this chapter tells cash inflow, one is in certain case you are guaranteed you get. But in reality, many times you are not sure. When it is not sure, you have to apply one statistical tool. Let us see how much of you are brilliant enough. When I am not sure, you have to apply a statistical tool. If I tell you an example, you will quickly tell. Sampling, no. You are not sure whether India is going to win the match. Example, today's different case, but yeah. What you will apply? Excellent. Under probability. Therefore, capital budgeting part 1, guaranteed or certain cash flows. Part 2, they call uncertain cash flows. Not sure. Then you apply probability. You know this, no? Just want to know. Do you know this? Do you know this symbol which I have written? South ulta anta helbadi iga. SD, standard deviation. Do you know this? Expected value of X. Do you know this? Probability of X. Just I am asking you. Yes, super. All this going to come. Very brief, they just introduced it, but very interestingly they introduce stats in your capital budgeting. Where and all its linkage, see, interesting. So this is your next learning. Capital budgeting has 2 chapters. Then you also have ratio analysis as one more chapter. You can make out this one chapter, this one chapter, this one chapter. Dividend decision, one chapter. I told you there are some sources of finance. Am I right? There are some sources of finance. Here I have written. Students, in the last decade or so or more than that, to raise the funds, there are much more options have evolved. Much more options are evolved. If you are an entrepreneur, you have if you have a good idea, you get seed capital assistance. Venture capital financing is there. Angel financing is there. Like that, there are multiple options. That's what I always tell the wonderful student. Today, people are investing in your ideas. You have various options available. Therefore, this one chapter tells what are the new age finance sources. What are the new ways? Of course, old, new, they are going to tell you sources of finance. I think, given some problem. Okay. I think these are all the broad chapters that you all have to note. You have to note. I just tell you the CA syllabus. Let us just tell you. This is all what we have to look into it. This is what I was wanted to tell you in last session. And it was broken up. It says in your material 4 or 5 chapter, I just divided into smaller units. Students, your chapter number 1, Introduction to Financial Management. Financial analysis through ratios, I've already told. Financial decisions, I've already told about financing decision. That's basically, we discussed that. Sources of finance was discussed. There is lease financing. Do you remember lease financing? We discussed in the last, in the somewhere in the foundation. There was buy the machine. I'll give you this example: 50,000. But lease rentals are 14,000 per annum for 4 years. At 18% per annum, should we buy? Should we go for buying or leasing? We learnt. So that was simple, no sir. We learnt in the CA foundation. No. Now we also look the same leasing from the tax angle. By paying rentals, you can claim some expenses in the P&L account. You claim tax. You reduce your tax burden. So how it is going to impact? If you buy it, you can claim depreciation. All this to be understood, and we have to discuss more. Not difficult chapter, easy chapter. That is lease financing. Guaranteed you will score there. I told you cost of capital. Have you heard KD? Have you heard KD? Hello, hello. You heard KD? Not in that Kannada meaning KD. Cost of debt. Debt means debenture. There is cost of equity, cost of preference shares. Every source of finance has some cost. You have to learn, you have to understand. Again, note that when you pay preference dividend, for preference you have to pay dividend, equity dividend, is it uh, uh, is it below line item or above line item? Is it below P and net profit or above net profit? All this preference dividend, equity dividend comes below the P&L account. Down, down, down. Therefore, no tax benefit. If there is a borrowing, interest on loan will come under P&L account. Therefore, revenue deduct expense, deduct that interest you get, on that you pay tax. So reducing, but there is no benefit in preference and dividend. So therefore, you have to learn how that cost of capital in relation to your taxes. Nothing to learn income tax as such, but simple learning of tax benefit you have to know. Capital structure, I was mentioning to you, majorly either is debenture or equity. Is it 70-30, 60-40? What is best method? Some theories are there here. Some theories. Some big the management thinkers have given an idea. What should be the ideal capital structure? How much should be debenture? How much should be equity? Some theories are there. That you are going to learn. Okay. Leverage. Leverage, the technical or simple word meaning leverage means advantage. All of you write in your chat box. Leverage means advantage. Leverage means advantage. All of you write. Leverage is equal to advantage. Okay. Now I will tell you, debt are your debentures, and the owners called equity shareholders. Both are there in the business. Can anyone tell me, having outsiders in business? Outsider means debenture holders. Listen carefully. Listen carefully. Having outsiders in business, is it advantage to you? Is it advantage to you? Okay. No. Very good. Many of you said disadvantage. I'll tell you one more idea. In cost, there are some fixed cost, there are some variable cost. Now tell me whether fixed cost is advantage to you. Whether fixed cost is advantage to you. I'll give you two classic example. In simple, I will tell you how it becomes advantage. Listen carefully. You all have become entrepreneurs, decided after CA you want to do your own business, manufacturing of some herbal products, and you believed it has a good demand, made market survey, you have taken a big factory place and you have to pay rentals. Okay, listen carefully. Every month 1 lakh per month, 1 lakh per month you have to pay. So beginning from first year you pay 12 lakh per annum rental, and you don't have so much revenue, so much. So this is a word worry. Having that fixed commitment, whether you do business or not, you have to pay. So first year you made only 20 lakh sale, 12 lakh rental only gone, you are worried. Various cost, other things are involved, you incurred loss. Second year you made 50 lakh revenue. Listen carefully, you are kind of okay. Whether you pay more rent, same rent you paid. Third year, assume that 5-year rental agreement says it's 12 lakh per annum. Third year, you made 10 crore revenue. Hello, hello, hello. How much revenue you made? 10 crore revenue. Will you give your landlord, dear landlord, I made more revenue this year. Take a little extra, no? Dildar. Will you give it? No, you don't give it. You know that whenever you give, your heartbeat increases. So what I'm telling is, now that fixed rental become advantage. More revenue, same rental. Are you there with me? Are you there with me? Are you there with me? Yeah, that's the advantage. Similarly, I'll give one small, I don't know how much. Okay, I'll just give an example. You have 15 laddus. Okay, how many laddus are there? 15 laddus. You have 5 members. You know, all eating is military system. Okay, okay. Tell me, this is family A. Okay, this is family A. Tell me, in family A, everyone will get how many laddus? Fast, fast, fast. Simple math. For that, some of you are using calculator. Okay, it is 3 laddus. It's simple, easy. Very intelligent student. No, I'm sorry. You are very intelligent. I don't know how you become so intelligent. Easy, simple. All right. Now let us consider family B. Okay. Here also 15 laddus are there in family B. Here what happened is only 3 are insiders, but 2 are outsiders. Tell me, outsiders, guest, someone else. Huh? Whom you give first? Outsiders. Why? Why outsiders? Guest first, no? Atiti Devo Bhava. Very good. Okay, you will give. Will you give 3, 3 each, 5, 5 each? Or you give minimum? Frankly, you answer me. Good laddus, Tirupati laddu. You will give 1 each. Very good. Excellent. Why 1 each? You are worried. If they eat more, if they eat more, kayato, diabetic, no? They will become diabetic. You don't want them to be little. So you give for 15 laddus, you are given 1 1 each, 2 laddus gone. 13 laddus remain. Tell me now, 13 is divided by 3 people. Everyone will get 4.33 laddus. Here everyone will get 3 laddus. Now you tell me, having outsider is good in business or not? If you are a family member, you are a member, insider. If you are an insider, which family you prefer? Family A or family B? Family B. Very good. Why? Because having outsider, where for them you give 1 1 each only. Your committed is only 1 1. And you give 1 1 only. You don't give more. Insider, no, their expectations are more. Same example, if you extend, it becomes leverage analysis. The insiders are called shareholders, equity shareholders. Here, equity shareholders, outsiders are debenture holders. Whenever you have profit, this is laddus are nothing but profit or earnings. You give outsiders, debenture holders first as interest. Whatever remaining, all are shared by equity shareholders. They may not get dividend, but they will get later. I think you understood. So, debenture holder commitment is fixed. Debenture holder interest is not changing. No, it's fixed. You give 1 1 laddu only. And then whatever remaining, all are shared by owners. Next year, if it is 30 laddus, remember, then also you told them, you committed them 1 1 laddu only. You give 2 laddus. 30 minus 2, 28 remains. Divided by 3, fast, 28 by 3, 9.333 laddus. More the revenue, more the profit, more the benefit to the shareholder, because for debenture holders you throw minimum biscuits. Am I there? Am I right? Am I right? You are committed, minimum you pay. So having outsider is good. This we learn in a topic called leverage analysis. You are going to learn capital investment and dividend decisions. Capital investment decision 1 to 1 is, I told, no, capital budgeting, where you are going to get certain cash flows, where second one comes probability, etc. Dividend decision I have already told. Management of working capital, I told, Mahabharat, stories inside stories, receivables, inventory, then cash management, etc. I think you understood what you are going to learn in as a finance professional. Student, just I'll run through what could be more in the CA final. This is okay. This is very interesting. What could be more? You are excited, right? Please answer. Are you excited to learn financial management? Something very interesting, practical aspect. Excellent. You are going to learn portfolio management. You have various securities. You have to make a combination. Your investment should go for many what securities. Uh, I'll tell you a nice sentence. All of you write down. Don't keep all eggs in one basket. Repeat, repeat, repeat. Don't keep all eggs in one basket. All eggs, not legs. Don't keep all eggs, EGGS. Don't keep all eggs in one basket. Many times I see student notes as don't keep all legs. No, not legs, all eggs in one basket. The funda of this, when you have funds, when you are going to invest, you should have diversified portfolio, so that if something happens, then if it spreads for many, and then your risk comes down. It assume that your investment you made in one particular sector, assume technology sector, or other side, real estate. Assume after COVID real estate has come down, you lost some money. If you are invested in multiple, then the risk comes down. That is the next you are going to learn in final. If at all domestic, we deal all in Indian rupees. What if you want to purchase a machine where you are purchasing through a US vendor, where you have to make your payment in not in rupees, not in INR, you have to pay in dollars. It's interesting, how do you learn dollars? How this money and that money can be compared? Are you there with me? Are you there with me? How do you deal with UK pounds? How that works? Is it similar? One US dollar is equal to how much Indian currency today? Go and check your newspaper. All that you going to learn in international finance. Today is the era of mergers and acquisitions. Two company, three company, three company, when they get merged, or banks get merged, how it's going to happen? What is the share value? All that you're going to learn in the mergers and acquisitions. Students, I think I told most of the aspects what you're going to cover in financial management. I'm just telling you, don't look just as an 100-mark subject, learn beyond it. Have you asked yourself? I come back to that original note. Gandhiji is there. You will be able to see. Yeah. Hope yours also original money. If you are excited, you have 1 rupee coin, no? What you should do is, you have to close you have to hold the coins. All of you have your note, one 500 rupee note. I will not do this exercise and a chilput example. No, I don't do that. I am not telling that that joke is a serious one. All of you have one coin with you. Hold your coin very close to your eyes, and very far you keep that 500 rupees note. All of you are doing? All of you are holding? Please let me know. Yes, no, fast. It need not be 500. Any note, little bigger note. Okay, super. All of you are holding. Students, hold your coin very close to your eyes, very close to your eyes, and very close. And I ask you this question, and please answer to me. What you will see now? What you will see? First, 2 rupee. Okay, very good. 2 rupee not seems to be bigger. Only coin you see. Others first 500. Okay, only coin. Okay, more answers first. If you hold very close to this, what you will see? Note look little. Very good. Excellent. Others are what, sleeping or what? Okay, only note you see. Very good. All right. Shall I tell? Shall I tell? Listen carefully, correctly. Gandhi you will see. Very good. Thank you, Prithvi. You are very good. Note becomes smaller than coin. Very good. Only note. Okay. Students, when I did the exercise, obviously I saw only coin. Both you can see, but first what it looks to you very closely, it's a coin. Students, all of us, listen carefully, all of us have a nice, what I can call specs, where like this, I'm just showing you one coin of 2 rupee, 1 rupee. Like this, hundreds of coins are blocked here. Will you able to see 500 rupee note? All your glass, all your eyes are blocked with 1 rupee, 2 rupee, etc. Here also 1 rupee, 2 rupee. Will you able to see that 500 rupee coin, 500 rupee note? Please answer. No, you will not be able to see. It's difficult, it's impossible. Students, this small coin is like our myths. This small coin is like our belief systems. This coin is our confidence level. This coin is our obstacles. This coin is our hindrances. This coin is our weakness. This is all filled here. You will not able to see this. You will never see. You want to get this, my dear student, then daily you have to remove this. Then only you will be able to see. Students, what I am telling you finally, I can give you a path like this. You can see on the screen. I want you to become CFO. I want you to become 100 rupee note like this. But not possible, because you are filled with hundreds and hundreds of coins. And every time you tell, I can't do it. Every time I tell, is it possible? Can I go there? In India, so many people are competing. Can I do this? When you have this so many times, what I call last class, hesitant energy, you will never able to see this 500 rupee note or 2000 rupees note. We are all struck, listen carefully, we are all struck with the short-term vision, short-sightedness. We don't see long, we don't go very long, we don't have that focus. As long as you have that, definitely you will be able to get better results. Though it looks very simple and silly to you, can I become CEO, CFO of a very big company, having so much big company, Tata, Reliance or Infosys, can you become CFO? Obviously. If you cannot, who else? Hard working is there, focus is there, you know what, but that you have to remove that shell that I can't. You tell every time you can. Day will come, definitely you will become CFO of a big company, where I'm excited to meet you on that day. Students, with this I want to tell that this is just the beginning. We'll meet in the intermediate financial management. All of you are excited to be a part of financial management. Please respond to me. To learn more from me, Financial Management FM, something different, excellent. For that, all of should be geared up and learn something really new. And I'm also very excited to teach you the financial management, the world of finance, the world of money, all that new comes into our business and life, personal life. And at the end, I want to tell you one important statement. It is not how much you earn important, it is about how much you save is important. It's not how much you earn, it's how much you save is important. That's all. With that note, I want to conclude. Uh, Thank you everyone for your very patientful listening. Shall we have one round of applause for all of you? On the nth hour, you are sitting and you are there with me. Loudly. All of you, yes. Loudly. Super. Thank you very much. I'll meet you tomorrow. Excellent. Super. Oh, okay. Some are still clapping. 1 minute. Jeevan, 1 minute. Bro. Hope you enjoyed the session and learned something new. Wait, Jeevan, 1 minute. Yeah. Thank you very much for your very patientful listening on the nth hour. Tomorrow I will come back and discuss costing beyond the subject. Very important chapter. Very important subject, where many students find it difficult. But trust me, I make that subject very interesting and easy. Don't miss tomorrow's session, 5 to 6:30. If you are there and every minute presence, physical and mentally presence with us, CA is not so far. You are almost there, and you are almost cracking the foundation exam, and you the getting result, and very excited to train you, teach you, guide you, mentor you in the intermediate, articleship, final, and beyond that. Thank you very much for your patient listening. Let us meet tomorrow, same time 5 to 6:30. Subject costing beyond the subject. Thank you very much. You have any doubts, any questions you all have? Shall take 5 minutes. You have any questions majorly? Thank you, Srikanth Reddy, for your compliments. Any major questions? I will have 5 minutes discussion. Anything is there? If no, thank you.